This is Pat Walker at Mission Winners making a video for us on target. And, I hate when this happens. I will tell you that. But I realize and accept the fact it's part of investing. This action is part of investing. Most of you know we haven't experienced anything like this in a long time. I mean, a long time. So what do we do? Well, a big part of this game, a huge part of this game is our emotions. We can argue with it. We can get mad at it. We can punch our computer screen. We can throw something. But does that really help us? If we get that angry, probably the best thing we can do is get up and walk away a little bit after the trade is closed. All right, that's good for us mentally, and that's good for us psychologically, and that's good for us physically. So I don't get into that, okay? I don't believe in punching inanimate objects. I don't, Now if you do, okay, fine. But I'll tell you what's much better for you. A, don't destroy property, and I'm not trying to harp on that, okay? But B, the best thing you can do psychologically, but also physically, is get up and walk away from the computer a little bit. One of the best attributes a good investor has, and I've read this years ago, decades ago, is a short-term memory. And you can say, that's corny. No, it's the truth. It's the truth. So here's Target. This is what we were looking at last night. Also, please note, it's a leading stock and a leading group, and they had good news. They had good earnings. All right. Now, what I'm going to do is I'm going to pause this and I'm going to switch to 30-minute chart so that we can see it as it's happening. All right. So here we go. So this is right here, the last bar yesterday. On the day chart, it looked fine. I showed that to you already. So let's proceed. And again, this is a 30-minute chart, which is what we look at. Look, it gapped up, it fell, and then it started to pick up. And what was our response? We started buying. You see these tops right here? Tops right there? Tops over here? We were buying as it was pushing through there, and it was pushing through on good volume. We bought, and it kept on going, and we bought more. All right? We pyramided. Price and volume confirmed it. We weren't chasing. We weren't getting emotional. We controlled risk. We didn't go huge, all right? But we controlled it. So now let's advance this a bar. And this is the next bar. This is 30-minute. It starts to fall. And it's like, that's not good. What do we have to do? As it's really starting to crack down, we get out. We sold twice. We sold for losses. Okay, I'm not going to minimize that. But we kept them small. I hate losses, but I accept the fact, and I hope you do too. They are part of investing. But by controlling risk, by managing it, managing ourselves, managing our thoughts, we manage risk. And again, you all know this. I was there for the crash of 87. I was there for the flash crash. I was there for everything in between. And I learned to have respect for the market. Have rules, tactics, and discipline to get in. And rules, tactics, discipline to get out. Don't say, oh my gosh, look at this. Oh, no, it ain't going to work. Just say, oh, this is dropping. I need to act accordingly. It's falling on volume. And this is the first 30-minute bar of the day. And again, it had volume there, folks. It was look at that. They're voting. Go to the next 30-minit bar. Does this, and then it starts to drop. And our response, as I stated, we've got to sell. And then this is the next bar. This is the current bar. Look at this. I mean, that's horrific. Horrific. And that's where it's at right now. Now go to the daily. I wanted to do the 30-minute. I didn't want to show you this all at one time, although I know you're aware of it. Okay? You're aware of it. But I didn't want to put that psychological footprint on you that you're like, oh my, and you're not really focusing on what we needed to focus on at the time. And that's the daily combined with 30-minute or hourly and acting accordingly. And this reminds me, and this is not a huge, even if you sold down here, okay, if you bought here and you sold all the way down at the bottom, it's not even a 10% loss. We sold for much smaller than that. And again, I'm not minimizing the loss. Please don't think that. No way. Am I frustrated? Yeah, but I know it's part of doing this. It's going to happen. It'd be like if you're involved in sports, if you're a football player, if you're a soccer player, okay, man or woman soccer player, all right, you're going to get hit, okay? You're going to get knocked down. And I'm not trying to minimize physical stuff here, okay? That's not my point, but it's part of it. So again, what do? We simply control the action to not have a major problem. To take this all the way down would be awful. Now, so we managed it. Here's the other suggestion I have for you. After something like that happens, please, no vengeance trading. No, I'm going to get it back. No, handle each stock by its own merits. We always control risk. Again, we're really good, and I'm not bragging, okay? We're really good, though, on managing risk. It is compulsory. We will have losses, and anybody who says we won't is a liar or doesn't invest. But we keep them extremely small. I wanted to get this video because I think this is important. Very, very important. I hate that it happened, but it did.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.